This October, I'm paying attention primarily to 5-wheel strategy stocks, and everybody that comments down below is also going to get my option sellers tax guide. If you want that full guide and the resource that helps me with my taxes, just drop a comment down below on today's video, guys. But let's get right into it, guys, because today we're going to be talking about the 5-wheel strategy stocks. And also, quick reminder, guys, I believe in full transparency here on the channel, both my wins and my losses. My broker statements are now officially on onlypeterpru.com as well as optionsellerschool.com if you care to check those out. But guys, let's get into the 5-wheel strategy stocks that I'm paying attention to this coming October, okay? First one is going to be American Airlines. Now, this one's obviously a little bit obvious because we do have a cash secured put now at $12 for American Airlines. Now, if you've been following along with the live challenge, you've seen that the past few months, I've been primarily focusing on Snapchat for running the wheel, like a cheap wheel strategy stock. Now, unfortunately, Snapchat has just taken off, and most likely my Snapchat calls here for 8 that are expiring this Friday are going to be sold, which is going to free up some extra collateral and capital for me to deploy. So where am I looking? Well, I'm always thinking ahead as an option seller. Where is that money going to go? Because I'm trying to have as much as my portfolio as possible working in good with good opportunities, not just rushing into anything, of course, right? So for me, American Airlines is most likely going to be that play, okay? So obviously I'm in the 12s. I'm going to be looking at the 1050s as well here, maybe honestly even the 10s. I mean, on the trade log, you guys can see that look, one of you guys is in here with me. I love when I come in here and I see one of you guys looking at the trade log. So you guys can see my American Airlines covered call here, or my cash secured put on American Airlines gave me a 3.36% return on my collateral. Obviously, that's really it was aggressive of me to do, guys. I'm not going to lie to you, right? That was definitely more of an aggressive play, but I took it anyway in order to bump up the portfolio here. But I will most likely be jumping into some additional American Airlines on this portfolio. And if you want this full trade log, just click the first link in the description of today's video. You're going to also learn more about the Ark Options Strategy. Second stock that I'm paying attention to is Colgate. Okay, guys, right now, I don't know about y'all. I just we need like a solid correction in the market. There is just all the stuff that I want to get into is just, I believe, well, I know it's just everything is so extremely overvalued. So right now I'm kind of going to the old reliables in a way, right? The old faithful, so to speak, right? I'm focusing on key indicators like the 200 and 300 day moving averages and looking at companies that are kind of like falling knives and just getting absolutely beat up recently, okay? And Colgate being one of those. Obviously, go do your own research on these stocks. These are just the ones that I'm watching. But you could see our 300-day moving average of $92, our 200-day moving average of 88, and currently trading at 79 right here, right? So this is one of the stocks that I'm going to be paying attention to for some additional cash secured puts on 75s, maybe even 70s as we continue to drop down here on Colgate. And you can see very oversold here on the RSI and really has been really just riding this bottom Bollinger Band down here the past couple months. So a great setup in my opinion. Okay, next one is definitely a more of an expensive stock. I get it, right, guys? But this is the reality of the situation. I like these old reliable kind of companies, these blue chip companies right now. I'm not selling puts on NVIDIA right now. I wish I was. I want to be, right? Because I get juicy premium. It's a company I am still very bullish on. But again, I think everything's just so overvalued, and my gut just tells me just go stick to the boring stuff, right? Stick to like Procter and Gamble's of the world, right? So right here, PG is trading well below the 200 and 300-day moving averages here, 165 and 162, trading at 150. We had a big drop here around the middle of September, and it's been really showing no signs of really recovering here at all from that, down from those like 160 level. And it was really kind of like doing well right here. It was working its way back to the 200 and 300-day moving average and just took a dump here and just been kind of hanging out. Now, in my opinion, I think this is still a fantastic setup. I mean, an absolutely fantastic setup. I'm watching even the 150s on this thing. We haven't seen these. I mean, it was down here in that like a month ago or 2 months ago. It kind of got down to that 150, but it seems like we do have a lot of support around that 150 range. So even the 150 puts, it for me, at least my personal opinion, are rock solid. And these are just plays, guys, just to get the cash working, let the premiums start to start flowing. And we could go take a quick look here at P&G. Let's go take a quick look at P&G on what kind of premiums they're actually going to be getting even at the 150. Now, again, they're not going to be juiced up, guys. Like, let's bring it down to a little bit, right? The point of this community that we're building here with OSS and even just our free Facebook groups and stuff, like, I don't want these to be, I don't want people that are just like, oh, I only want like leverage ETF, 6-8% returns on things. Like, no, like what we're doing here is we're compounding. We're letting compounding work do its thing. And we're doing that with dividend paying stocks. We're doing this with premiums. We're doing it with collecting interest. And you do this over long, many years of time, right? That really stacks up, okay? So I'm just going to go out 32 days here. And we can see even at the 150s, I'm actually shocked that the 145s are even giving us $152. But looking at the 150s, I'm curious what our delta here is. Yeah, 30, actually shocked that it's even a 0.38 delta here. So, you know, about a 40% chance of assignment, a 60% chance of expiring worthless. That's the way I like to look at it. Collecting $298 of premium. Let's take a look at what that looks like in our cash secured put calculator. All these calculators are free in our Facebook group. Link is in the description if you want it. So let's just do 298. Now again, with a PG, you're wrapping up $15,000, right? This isn't a small thing. No one's gonna just laugh at $15,000, but hits around a 2% return and what around a 32 expiration date. Honestly, for me, I really like that play, guys. Like, I'm not, you know, again, you have to bring your expectations down, right? Like, again, these results are just what I'm seeing at the time of me recording these premiums. Obviously, nothing here is ever financial advice. Results will 100% vary for you, and options trading, of course, is risky. But in my personal opinion, I like this strategy because if I genuinely like Procter Gamble, right, and I am okay owning it at 150, I now collected an extra 2% in a single month on my collateral of my $15,000. I get assigned Procter Gamble at 150, maybe if it drops to that or lower at the expiration date, right, at close on the expiration, and I now can then run covered calls and collect the dividend from Procter and Gamble. That's just how I like to think through things, guys. But yes, when you start going and starting doing puts on SoFi right now, you're doing puts on Nvidia, AMD. Of course, those are going to be insanely high. They're going to be insanely high. But you remember, you're taking on drastically more risk. Everything is priced into the market already. We do not have an edge, guys. Right? We are competing. It's like literally algorithms, all right? Like, at least for me, I try to stick to this basic, you know, quote unquote basic strategy of buying and investing in stocks that I love and collect premiums on both sides of me selling or wanting to buy the stock. I don't know about you guys, but this is the last trading strategy I'm ever going to do. And it's been the only trading strategy that's honestly worked for me. And that's why I started this YouTube channel. And I believe in like showing that transparency as much as I humanly possibly can, especially showing my broker statements. I don't care even if I start losing a whole bunch of money, whatever, guys. I'm only human as well, right? It's been good for us so far, which is fantastic. But yeah, let's keep going here. Okay, next one I'm watching is Kroger, a little bit on the cheaper side, and that's why I have this one kind of in the back pocket here. Now, this one's not set up beautifully yet. What do I mean by that? Well, I want it dipping below, and it very well could when you're watching this. I want this dipping below the 300-day moving average of $63. That's when this is going to start exciting me a little bit more. Again, a business that I really like, a business that I believe in, and an old, you know, essentially a reliable company in my opinion. Okay, let's go take a quick little look at what Kroger premiums are looking like. And I do like this one because I like having like these mid-range kind of you know, conviction stocks that I like to sell puts and covered calls on, because not always do I want to wrap up like $15,000, $20,000, you know, $60,000 for puts on SPY, right? So, you know, it's good to have like a good mixture of like cheap stocks and like high conviction, more expensive kind of stock. So again, I'll just go 32 days out here as well. And, you know, our premiums are decent here. They're not, I mean, not fantastic, right? But we would also be playing a bit close to the money here, right? With the delta of a 0.38, let's just call it 40 delta here. You know, you get collecting about $90 on 6,400. Let's see what that comes out to. $90 on 6,400 wrapped up. You know, 1.41% return. I mean, not fantastic. Like, it's not a fantastic return, but again, it's getting the money working, right? That's the way I like to look at it, guys. It's not always necessarily about, now for me personally, I wouldn't do this trade. That's just me. I wouldn't do this trade. I have my own targets that I shoot for. You got to figure out yours, you know, whatever those goals and stuff that you have set in your life, you got to figure those out for yourself. or speak to somebody that can actually help you with that. But with that said, for me, this is why it's good to have a big watch list, because sometimes maybe the premiums just aren't there. Like in this situation, guys, like I'm looking at this, I'm taking about a 40 delta risk on this, and I'm not even getting anywhere near my my ROI on collateral goal. In this situation, I wouldn't do it. And then if I go up, maybe that's a little too close to the money here for me if only for 130. Like I really wanted that to be pushing a 3% ROI on collateral. Now it's a very conversation I can have for a very to a huge extent, but this is why it's good to have a larger watch list, and you can only do that and build that over time. Okay. And then lastly, the last one I'm obviously going to be paying attention to here, guys, is going to be Kraft Heinz as well. Obviously, we have our covered call in on this, right? This is still a company that I am a firm believer in, like genuinely, but I am paying attention to this because this is essentially splitting into two companies, down another 1.5% here today. And the premiums, they're okay, guys, right? Like our trade that we have on it right now, we have a covered call in on it for the 27s to sell our shares for $27, and that gave us just under that 2%. I would love to be at that 2% at the very least, but sometimes we can't always get it. And again, I'm expecting a much bigger pullback across the board, so I want to be prepared for that, and that very well could be happening in October. Guys, don't forget, drop a comment down below, and I will personally send you the option sellers tax guide as well as my resource who I use. And if you want my full trade log that you're seeing here, along with information about the Ark Options Strategy and our mastermind group, click that first link in the description of today's video. Guys, remember, sell options, collect premiums, repeat. I'll see y'all tomorrow.